In the hallowed halls of corporate finance, a silent war rages. Not all threats wear external faces, some fester within, eroding trust and draining resources from the very systems designed to protect us. This is a critical training module, designed to heighten awareness and fortify our defenses against the insidious schemes of billing fraud and personal purchases. The camera sweeps through the bustling accounts payable department of a large corporation. We meet Maya, a trusted mid-level accountant, and Ethan, a procurement officer. Their actions, seemingly routine, mask a deeper, more sinister intent. This scenario isn't just a story, it's a stark warning for every employee, manager, auditor, and student of business. Understanding these vulnerabilities is the first step towards robust prevention and unwavering compliance. Maya, reviewing a stack of invoices, intentionally processes an overpayment to a legitimate office supply vendor. This isn't merely a mistake, it's a calculated betrayal, a deliberate act of fraud. Later, Maya contacts the vendor, claiming an error and requesting a refund. Crucially, she provides her own bank account details, diverting company funds directly into her personal accounts. This classic pay-and-return scheme exploits established vendor trust. Ethan, in procurement, creates a fake invoice using a legitimate vendor's name for services never rendered. The vendor is real, lending credibility to the fraudulent document. The accounts payable team, seeing the familiar name, processes the payment without suspicion. The funds are routed to a bank account Ethan secretly controls. This is the art of deception, leveraging legitimate vendor credibility to camouflage fictitious services. Maya submits an invoice for consulting services from a shell company she secretly owns. The services were never provided, yet the paperwork appears legitimate, bypassing internal checks. The company pays the invoice, and Maya uses the funds for a luxury vacation. This direct theft highlights how weak internal controls or unchecked approval processes can be exploited for significant personal enrichment. Ethan fills out a purchase requisition for high-end electronics, claiming they are essential for a new project. The items are delivered, but instead of business use, Ethan takes them home. False purchase requisitions allow fraudsters to acquire valuable goods for personal use, disguised as legitimate business needs. This scheme underscores the importance of verifying the necessity and destination of all company assets. Maya, with access to a company credit card, charges expensive dinners, personal travel, and shopping sprees. She meticulously codes these expenses as client entertainment or business development in her reports. Company credit card abuse is a widespread issue, often concealed by inflating legitimate expenses or splitting transactions across statements. Vigilance in expense reporting is paramount for all employees and managers. Ethan purchases office supplies using company funds, then returns the items to the store for a cash refund. He pockets the cash, leaving the company with the original expense on its books. Returning merchandise for cash is a simple but effective way to convert company assets into personal funds. This scheme thrives when receipts and returns are not closely monitored or reconciled. The company's internal auditor, Samantha, notices several critical red flags: multiple refunds to unfamiliar bank accounts, duplicate payments, unusual spikes in purchases, and vague expense descriptions. She initiates a thorough review. Samantha uses data analytics to spot patterns and cross-references vendor addresses and bank accounts with employee records. Robust internal controls, regular audits, and vigilant monitoring are essential to detect and prevent these schemes. Maya and Ethan are confronted with the irrefutable evidence. The company tightens its controls, implements dual approvals for payments, and launches a comprehensive fraud awareness campaign. Billing fraud and personal purchase schemes cost organizations billions each year. But with vigilance, strong controls, and a culture of integrity, businesses can protect themselves from the double deception. This isn't just a story, it's a call to action for every employee, manager, auditor, and company. Understand these schemes, recognize the red flags, and report any suspicious activity immediately. Your vigilance is our strongest defense against fraud. Let's build a culture of unwavering integrity and compliance together.